Hello, welcome back from the weekend, and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is March 2nd, 2009. The Australian manufacturing sector contracted at a record pace in February, with the PMI falling 4.9 points to 31.7. Companies received fewer orders from both home and abroad as the global recession pressures exports, while domestic demand is fragile among weak consumer confidence. In a second release, new home sales rose 8.3% in January, the best home affordability conditions in 5 years, and the boost to the first homeowners grant propelled the surge in sales. The TD Securities Melbourne Institute monthly measure of inflation registered a 0.7% increase in Australia on the month, slightly lower than the 0.8% seen in January. The annual rate rose to 3.1% from 2.7%. The second month in a row that inflation has accelerated. Prices of gasoline, restaurant food, and computing equipment were the main culprits behind the rise. In a final release from Australia, company operating profits fell 6.5% in the fourth quarter, a sharp drop from the 7.3% increase seen in the third quarter. It was the first decline in more than a year as earnings at manufacturers, builders, and wholesalers fell, signaling the strain the Australian economy is currently feeling. The Aussie-US dollar pair declined today, falling at the Global Open, which extended losses seen in Friday's session. The pair bounced down off support-resistance at the 0.6450 level. Since that test, the pair is down about 150 pips, breaching the 0.63 level. That was the lowest the Aussie has been since February 1st. Turning to the UK, the manufacturing sector shrank for a 10th straight month, falling to 34.7 in February from 35.8 the previous month. It's the weakest reading since the index reached a 17-year low of 34.5 in November. Employment and production contracted at the fastest rate in the survey's history. In the Eurozone, the final version of its manufacturing PMI at 33.5 came in around its preliminary reading. Staying in the UK, consumer lending rose at the slowest pace since at least 1993, a 15-year low. New consumer lending increased in January by £1.1 billion compared to £2.1 billion in December. In the same release, the Bank of England also showed that there were 31,000 mortgage approvals in January, levels consistent with December, though lower than forecast. Mortgage lending, just like consumer credit, increased at a very weak pace of £700 million, undercutting forecasts. The pound came under heavy pressure today against its key rivals, the Greenback, the Euro, the Swiss franc, and the Yen. The pound-euro pair, shown here, rose 200 pips from its intraday low in a rally that started at the European Open. Not only were the manufacturing and lending data out of the UK weak, but HSBC announced that it will initiate the biggest ever rights issue at £12.5 billion in a move to enhance its capital strength. The bank's shares slid 10% as a result of the news and pressured stocks in London, with the main index down 5% at its close. The pound-dollar pair fell below a key zone of support between 1.41 and 1.4150. The pair saw a more than 300 pip downward move, dropping from 1.43 to 1.3960 in today's session. In the U.S., the government said it was committing up to another $30 billion of taxpayer money and increasing its stake in AIG to keep the firm from failing on its financial contracts. For the fourth quarter, AIG posted a whopping loss of $61.66 billion. That increased risk aversion, which boosted the greenback as a safe haven. In the Eurozone, a flash estimate of annual consumer inflation saw prices rising 1.2% in February. That was higher than the level seen in January and surprised forecasts on the upside. In U.S. fundamental news, personal spending rose for the first time in 7 months, climbing 0.6% in January, which was more than expected. The increase compared to a 1% decline in December. Americans took advantage of post-holiday discounts, but with the number of layoffs increasing, consumer spending is expected to retreat again. Personal incomes, meanwhile, grew by 0.4%, surprising forecasts on the upside as well. Factors behind the rise were pay increases to government employees and cost of living adjustments to federal transfer payments, as salaries and wages actually fell 0.2%, a third consecutive decline. The U.S. manufacturing sector contracted at around the same pace in February as it did in January. The ISM manufacturing PMI improved slightly to 35.8 from January's 35.5, though any number below 50 means contraction in the sector. Expectations had been for a decline in the data to 34, so today's results surprised forecasts slightly on the upside. Still, this level is consistent with a rapid decline in the sector. The euro-dollar pair was lower today after it was sold off to start the global session. After falling to the 1.2550 area, the pair traded sideways during the European and New York sessions. Over the weekend, EU leaders rejected plans for special aid for Eastern Europe countries and a rescue package for automakers, which pressured the euro to start the week. The dollar-yen also mainly traded sideways today despite U.S. stocks falling, with the Dow Jones breaching the 7,000 mark. Weaker global stocks and increased risk aversion from the news surrounding HSBC and AIG pressured the loonie, which had already been on the ropes during Friday's trading. Today, the US dollar-Canadian dollar pair climbed another 150 pips to test 1.29 and caps a 360 pip move in the last two sessions. Oil prices plunged $4.60 to $40 a barrel, which intensified selling of the Canadian currency. Tonight, Australia will post its retail sales and current account data, and the Reserve Bank of Australia will decide on interest rates, where it is expected to lower rates by a quarter point to 3%. Overnight, Switzerland will release its GDP data for the fourth quarter, Germany posts its wholesale price index, and the UK reveals a measure of construction sector activity. Tomorrow morning, the Bank of Canada will decide on interest rates with expectations of a 50 basis point cut that will bring rates down to 0.5% from 1%. U.S. news events include data on pending home sales and testimony by Fed Chairman Bernanke before the Senate Budget Committee. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.